Hey everyone, I'm Brian Stutland here with my colleague Joe Teague here on the Trading Zone. We're talking about the markets today. Obviously, lots of things moving given the Iran-Israel controversy that's been going on all weekend. But we want to get right into it for volatility because volatility is on our mind, and that's been moving markets here. So, Joe, if we take a look at it, take a look at the skew in the S&P 500. We always look at that, right, Joe? The difference between calls and puts, the downside put, what people are willing to pay. Are you seeing anything that's really, might be a key? Are people buying insurance right now in this market, or are they feeling pretty good now that it seems like Iran wants to come back to the table to talk again?
Yeah, they are looking like people. I don't know if Iran's willing to come to talk to the table, but it looks like last week we had the big run up in skew. We can bring up our chart here. We have this is real quick looking at the VIX here, Brian. It was peaked maybe 22 last week. Really didn't get out of control. Really would have assumed a much higher peak in the VIX, but just going to the skew like we always love to look at here, Brian. Didn't seem like there was excessive panic put buying into this conflict, which is now going on 5 days. There's never been excessive panic put buying, which is really a little surprising to a lot of traders. Maybe too quiet of volatility. But that said, here we are, no excessive panic, no real sign one way or the other. We didn't get a relative high even from where we are. We're in the middle of May, looking at some trade conflicts. So really, really interesting to see.
Yeah, I think though the one thing is that you're right. There's no panic in the downside put by, which is very interesting, as if maybe this conflict is quickly comes to some sort of head. But I thought it was interesting that the skew index did make a continual higher low. We keep seeing that for like the last, call it 6 to 9 months, where, if it drops low enough where there's been a little bit of excessive call buying, right? That's what makes the skew go down. It really hasn't been able to, dip below where it was a few weeks ago, but longer term trend going all the way back to last year, we're still kind of on this sort of upward trajectory. So that worries me a little bit that there's maybe a little bit of concern still out there in the market about insuring a portfolio. And when VIX and volatility get cheap enough down below that 20 level into the mid to upper teens, it's maybe time to buy some insurance on a portfolio.
That's absolutely true. And I don't think it's something that means the market can't rally, Brian, with the volatility just having a higher low here on these levels. We're seeing the market just continue to climb these walls of worry. There's seemingly more and more worry. It's just crazy, Brian. Like a week ago, we were saying how crazy the news was. And now we have like the biggest news story of the week after all that crazy of the year. Like many years after all that crazy news. So the market's continuing to being thrown, curveball after curveball, and yet the market still is able to stomach it all. And for me, looking at all the news, there's so much news out there, so much worry out there. The only thing I can really trust, Brian, are these futures and these economic data points where we're, that's where like the real news is. So it's really amazing to watch. There's a lot of scare. There's a lot of fear out there. Oil 74, we're going to get into that later in the day. Market's still basically where we were last week. So the market's still saying, hey, we can get past all this, even though this is really scary news.
Yeah. Well, I mean, we've been talking about this the last few weeks, Joe, on the show is the market has a dip. Maybe it's the time to then sell a put. We're in the summer months, and we talked about the sell and may go away is really sell volatility. And now we're in the rip territories we're seeing in the markets today. And maybe it's time to sell a call or roll a call that you've been long. That's been the trade really for the last maybe month. So no difference really there.
I think the market will give us the clues, though, Brian, because it seems like this was bad news and the market's kind of buying it. The market will give us the clues when bad news is just bad news, and that'll be just with stock prices lower. So we'll be watching out for that, obviously. People are talking about oil advancing higher. That could be the catalyst to tip these economies over and these stocks lower. When that happens, we'll address it, but we haven't seen that yet. I'm surprised it hasn't, I'll be honest with you. I'm surprised oil's just kind of hanging in here in these mid to low 70s, but we haven't seen this spike in oil. And I think the market's just saying, hey, if oil's under control, this is just going to be Israel versus Iran, and the rest of the world will go on as usual.
Well, it is interesting. I saw something come across the tape on the Wall Street Journal that Iran is willing to now come to the table and talk potentially, and try and end this conflict. And we're actually seeing oil. I'm just looking at the screens over here, down below 70 now, dropping down 4.5% on the day at 69, 68. So just below that. And you're looking at the VIX futures curve here. Also, VIX futures curve dropping as we are talking, with the front month now at 19. But when you look at this, obviously, we kind of traded up really just above where we were a week ago, back to that sort of mean reversion. I think the very high end of the VIX futures is just, going to be right like that. You look at 2 months ago, we're probably not going to get there. That was maybe a top for a few weeks until we get more information about tariffs, if that has any effect. That was obviously more of a disturbance on the market than anything else. And so when we're looking at the VIX futures curve, we're seeing that drop down here. Maybe that red line area where we are right now, it's dropped. Maybe that now kind of becomes an area to look at as a sell vol a little bit area, and the buy vol is maybe where we were a month ago, which is about where the VIX futures are trading at now, down to front month down to 19. So a little bit lower here. I'm probably a buyer of volatility at some point here as it kind of things come off and things sort of calm down a little bit.
Yeah, it really is amazing to see where futures were 2 months ago. Yeah, but I think
we did a good job of scalping it, didn't we?
Yeah, no question about it. Even recently, looking at that wall of worry we saw last week, I want to pat ourselves on the back. I'm not supposed to talk about our returns, but feel free to go take a look at the Rational Equity Armor Fund and the Catalyst Hedged Equity Fund. You'll see how we've done in those areas. But yeah, it seems to me like this 21 area and the 16 area, I expect these futures to be living in here.
Yeah.
Short of anything catastrophic. We saw something catastrophic, and we're still kind of living in there.
Yeah. I think that's a great range. That's what I would be looking at. Get down to 16, buy it. Get up to the 21 area, sell it.
And that'll go with our philosophy. When things seem really good, it's not as good as it seems. When things look really bad, it's not as bad as it looks. That's got to be how we're going to be looking at this. And honestly, like Brian, last week, we were talking about, isn't it crazy? We had this Musk-Trump fight, and that was the craziest news story ever. And we're not even talking about that now today, because we're talking about these protests and these rallies, and that seems like years ago. So these weeks are years right now in 2025. It's just absolutely amazing, and yet we're still not seeing VIX climb above 21. We're still seeing this continued march forward. So there's just so much going on, and probably going to be moving on to the next thing before we even know it, Brian. We got the G7 happening this week. We got the Fed happening this week. There's just news that is not stopping. Maybe the next news event will make us forget about this war.
Well, yeah, it's kind of anytime there's like a big G7 or so meeting, I do feel like the market sells off a little bit, because I think people get a little nervous about, the objections that maybe go back and forth, the discussions, and this is not going to be as growth empowering kind of meeting. It's going to be more of like, I got to stand my ground here, foot, and stand up for what I need, and then there's some discussions about it. So we'll see if that shakes out later in this week, and the rally kind of subsides, and the S&P pulls back to maybe like 6,000 or something like that. But certainly you're right. The headlines are crazy, right?
Yeah, the headlines are crazy. Trump's previous G7s have been really, really odd. There's that famous picture of Trump sitting there cross-armed, and Merkel's scolding him, and all the leaders are leaning in, you got to do what we say. And Trump's just I don't care. I think that was something climate related. But yeah, this is another potential mover. Right now we're talking about tariffs. There's all sorts of geopolitical stuff that need to be discussed too, obviously. So hold on to your horses here. Things will be moving. Now, people are also talking the risk of inflation, the current wars, rising oil prices. Obviously, that'll hurt inflation. The Fed doesn't necessarily look too much at oil and food. Maybe they should. Maybe they should look at what real inflation is. But that could be something people are worried about. If oil is coming down, that's a if oil's not getting out of control, that's great news for everything, obviously. And yeah, we're gonna get this Fed meeting. That's going to be a really important thing for the market. Obviously, they're not going to lower rates this time, but people are expecting by September there's maybe a 2/3 chance of at least one cut, maybe a 15% chance of two cuts. So the market's certainly expecting by September the rates to be lower.
And yeah, I mean, this is an interesting week. Obviously, the Fed is going to, their press conference is obviously going to determine where we get some clarity on where interest rates are going to go. Because I think the two things really that are the market moving events are inflation and those CPI, PPI numbers that we keep getting, and also where the Fed's going to guide on interest rates. We obviously know that Trump and Powell met. They actually had a meeting together. So that will be kind of interesting to see if that had any ramifications on driving interest rates maybe lower. So we'll see how that plays out. I mean, Joe, as you know, you and I are portfolio managers here at Equity Armor Investments. We cover trade ideas, as we'll do at the end of the show always, and we always cover our volatility aspects. So hopefully you enjoy that. Make sure you come in here and check us out and like us every week. But as we get into it, we also always like to talk about the macro environment. As people are sort of filtering in here on our live show, we want to give some ideas of where the S&P is going, where maybe crude's going. You mentioned before.
Yeah, and
what are you seeing here on the S&P 500?
Sorry for not being able to shave this morning. Really busy morning. We got 2 trades off for our subscribers. We had a big one last week. We bought some puts into Adobe earnings, quickly turned that one around for a nice scoop and win. We've long haul after these earnings. It's really important to just capture that win when you can. We've had a couple of really good ones. Palantir, even we played that the downside, if you can believe it, made money while we're also making money on it going to the upside. It's just nonstop Palantir. So we got a couple of trades I'll be talking at the end. An update of last week's Amazon trade. And we got a brand spanking new one, which is looking good as we go on. Our subscribers are hopefully got in on the email. Make sure you check us out at equityarmorinvestments.com to take a look at that, and you'll get those notifications as well. S&P 500 bouncing currently. Great news to see that, obviously. We were just watching this last week, just a tremendous run up since the lows here. Talking about a lot of money on the sideline. Money market funds are higher than they've ever been. Does that mean people are underinvested? It's hard to really dive into that and really say for sure, but that could mean that some portfolio managers are underallocated. We got the quarter ending. That's why last week we were kind of bullish heading into the quarter end. We bought some calls there. I think similar strategy might be in place, even though we saw this big, massive disruption late last week.
Yeah, and I think you'll kind of notice if the price looks a little weird on the active S&P, but obviously expiration is this Friday, the third week. It's the quad witching kind of third Friday with options and futures and everything else. So the active contract in the S&P has switched over now to the September futures contract. And but when you take a look at it, we still have to remember that on the old contract in June, 6,000 is a big number on the S&P. It kind of big round hole numbers like that sometimes act as a magnet as you get into the main expiration, which is this Friday. So we'll kind of see how that plays out. And it's a weird expiration too, Joe, with Juneteenth just before it. So yeah, it's almost like you don't really have a trade before the market opens on Friday morning. So this will kind of be interesting, and to see if this market will just
the futures will be open. They'll settle in on that cash rotation. But yeah, that's going to be interesting.
Yeah, weird quirky week here, but we'll see if the market's back off at that big number of 6,000, or if now we've kind of gotten a catalyst event to come and go. And if Iran is really coming back to the table to maybe talk about things here, then maybe we just blow through 6,000 here and move away from it.
Yeah, and the NASDAQ, same kind of story. We got 2,200, maybe is
22,000. It is
22,000. Yeah, this thing has just been on the bigger tear. We're closing on these all-time highs. The triple Qs look a little bit closer. you'd love to see it. I mean, we're coming back. This might have looked like a double top. Now we're coming up again a third time. Don't usually see triple tops. That'd be pretty rare. Love to see this new all-time high. The economic data can support it. If interest rates are coming down, I mean, there are so many things coming together at once. They seemingly keep on getting interrupted by these news stories. But we got the budget, we got the tariffs, we got interest rates. They're just all happening at the same time. Love to see peace deals. Obviously, that would help everything out too. But if we can get these things together in the market, I think we'd have a much easier time racing through these all-time levels.
But I mean, what do you feel about tech? I mean, we got the NASDAQ up here. Let's just talk about AI tech. Is the momentum still to the upside here, really? I mean, it doesn't matter what the geopolitical situation is. Is AI here to stay? And sort of any dip now is just met with a buying opportunity, especially in the NASDAQ 100, which is so tech heavy.
I'm a firm believer, as you know, Brian, if anybody's watching our show, that the AI trade is here to stay. We are still in the early innings of this AI trade. We're still really in the hardware build out. There's a couple of software companies like Palantir breaking through, but we're still in the hardware build out. The Mag 7 really is dominating the software side. It hasn't really found really huge money makers, but I think we're getting closer and closer. And they're spending these big bucks, these billions and billions of dollars to build out these data centers. I think they have a good idea of what the future is looking like. I don't think they're just wasting that money left and right. And again, it's not these small companies that are borrowing on leverage or new IPOs that are doing this. These are the big Mag 7 companies that have tons of cash as it is. So it's not really going to be damaging if it doesn't play out. But I'm very confident that they know what they're doing, and they will be seeing benefits to those investments as we go forward. So yeah, I'm a big believer of it. I think this tech wave has really extended this rally and really given us a new life in the economy, in the U.S. economy, which is really exciting to see. So yeah, obviously you know where I'm at here.
Yeah, I think when you look at 22,000, it could be a magnet for this week for expiration for the NASDAQ, is again a big round whole number to maybe trade back and forth around. But ultimately, you look at this chart, and I think it's still upside. I think, yeah, we saw a little bit lower highs as you kind of drew right there. I think if we sort of break through that previous lower high, I would really want to be a buyer and probably own some upside calls. At that point, because volatility will probably have come off, it'll probably have come down. Those calls will be cheap. So you're looking, 22,000, let's call it 600 or 700, and it's already up, but I actually become even more bullish.
Yeah, 100%. And on these pullbacks, I think for me the play is to sell some puts, collect some premium, get in these names at lower levels. So that's how I'd also be playing it. The one caveat I would say is, timing is everything. Maybe we just need a little bit more consolidation here, Brian. We might consolidate the summer months off in our, slower months. Maybe we'll consolidate through August and then pick up in September again. That seasonality that often seems to happen sometimes.
Yeah. So, I know a lot of the times on the show we talk about the semiconductors because they lead the market, but I'd love to just kind of skip ahead here to oil. We've been on the show now here 20 minutes or so and want to get into it. Yeah, there's the oil spike chart, because I think this is important. This is maybe the one thing. This is the one thing that maybe is a speed bump to the economy. But I don't know. Like, what do you see with that?
Yeah. Well, JP Morgan saying if the worst case scenario in oil is 125, I think, or maybe some people are saying even worse. So yes, that would be very bad. If we did see oil at 125, look at your current price here. We're touch below 70 for a second. We're back at 70. So maybe good news here coming for oil. Yeah, but the 115, 120 worst case scenario, of course, is with the Strait of Hormuz closing. Is it possible? Is it likely? Who knows? I think that is the JP Morgan worst case scenario with Strait of Hormuz closing. That shuts off about 20% of the world's exported oil, closing that strait. So that's obviously going to make oil much, much higher. So that is interesting. I think there's a lot of reasons why Iran would do that, a lot of reasons why Iran would not do that. I think which what we're weighing here. I think some of their allies Iran's allies, some of their best friends, would also be harmed by closing off that strait. So I think that's why they have not done that to.
Yeah, I think they're a little handcuffed. Could you bring up the live chart on that a little bit, because it was interesting.
Yeah.
Kind of looked like a double topping kind of formation. Yeah, right here. What's that lower level area right there in oil? Is that just at like 71-ish? Kind
69
of looks like,
area previous high. Oh, you wanted to see? Oh, yeah, this level up here.
yeah, right there. I think
Right here, maybe 71 and a
that,
half.
yeah, I think this is kind of a key breakdown now. Like, so I'd almost put a short on here in crude with a tight stop right at that level. Obviously, if it can't sort of maintain its downward back trajectory, I would want to be stopped out, and then actually I'd almost become very bullish on oil, crude oil moving higher. But I think until then, it looks like maybe we kind of broke down off its highs, right?
Yeah, the volatility here though is really high. Their volatility in oil is like the VIX. The higher it goes, the higher the volatility gets. So yeah, this is a tricky spot to be in for sure. Energy stocks, I think that's kind of how we're playing it, Brian. They move a little less sensitive to the direct daily movement in crude here, but yeah, they should have some increased volatility also.
Yeah. All right. So obviously we're watching.
Last week we talked about this though before all this trouble, of course, and we were just pointing out this breakout right here. We were saying this is breaking out last week. Look out! This is something to be watching for, and maybe somebody knew something or not, but this was already on the rise.
Yeah, it was. I mean, somebody was buying up oil contracts, actual physical oil or whatnot to sort of create that bottoming pattern that you saw there, and then we got the spike. But again, maybe we've come off that. Maybe the spike has just been so quick and nasty that it's done. Obviously, gold, another thing here. It's the sort of the inflation hedge that's been working for people for the last really 4 or 5 years. Is this about to top out though, or you think there's more upside here?
Anybody's. I think there's potentially more upside. I think especially if the Fed's dovish this week, people will say, I don't want to own these dollars because inflation is going to be worse than the Fed admits. So yeah, hard assets are going to be where people are moving to: real estate, gold, oil. Even oil does well in those times too.
Yeah, I'd be watching this 3,400 right here. I think if we get a little bit of a pullback there, that might be a buy point for gold. We go back below 3,400, so I think 3,400 is going to be a key level, both support, and if it breaks below it, then it'll become resistance. So
yeah, I mean the chart technically looks great. Got a really good consolidation here. Now it looks ready to go to all-time highs. I mean, what we're looking at is inflation in equities, inflation in gold. I mean, it's all going together.
Yeah, for sure.
I just threw this in here because wow. Palantir, wow, it's over 140 now and higher. So
yeah,
I was looking at a trade for a Palantir, Brian, just trying to be it in. Selling a put's not a bad option. It's just hard to chase it here. Always want to buy this on the pullback, no question about it. But on this run up, just kind of watch it and just be awed and be thankful that we owned it for our fund. A lot lower.
Yeah, I know, right? That's the AI play that you've talked about here. So what do we got with Amazon?
Amazon, last week we were buying the 225 call in July. If you punched in the 50-day moving average, you'll see the 50-day moving average is right about here at about 203, Brian. We spent 380 on that call last week. This went out to our subscribers. That 205 put is now 380, or at least this morning when the email went out was 380. So 205, I'd love to own it there. That 50-day moving average is there. I'd love to own it there. Bing, bang, boom. I collected the premium that I've spent on that call. If we go below 205, I'm an owner. If we go above 225, I'm an owner. I didn't outlay anything to do this trade. So that was what I was looking at. And that's why I did that. And I have a bonus trade. I was unable to type it in to the sheet here, but we bought June, expiring this Friday. QQQ 530 calls. Let's take a look at QQQ real quick, Brian. These are obviously looking pretty good. These are in the money. I'm expecting for a further rally. Limiting the risk, obviously, here, Brian. 640 was the cost of these calls. So people can buy QQQ. I can buy QQQ, or I can buy these calls. Very similar risk outlay. I'm only risking maybe 1% here for the rest of this week. But 1.25% for the rest of this week. And I get most of that upside, absolutely, if we were to continue to rally here.
Yeah, and as we wrap up, if you're a subscriber, you'll get an email alert when we want to take this trade off. This is obviously a weekly option, so I'm sure there's a good chance we don't hold it all the way to the expiration point, right? We kind of usually trade manage these very short-term options. So if you're a subscriber, you can get that next alert up. So make sure you tune in there. And this kind of like wraps up the show for us here, Joe. It's been a great week of trading, and obviously lots of surprises in the market. And hearts out to the folks in Israel, and hopefully some of that peace comes to fruition.
Absolutely hearts out to them too.
Yeah.
We are a unique trading group, Brian. We have Jewish members and Iranian members in our group. So
yeah, we do.
We are, very close to our hearts, all of us. So it's something that we're very sensitive to us, and just really hoping for a solution as quick as possible.
Absolutely. So God bless those folks over there. Hopefully we see peace in the Middle East. Make sure you tune in every week, Monday, 10 a.m. Eastern. We go on with our live show here. We get right into it. We talk about volatility, the macro environment, and especially our trades of the week. I'm Brian Stutland, portfolio manager at Equity Armor Investments, with my colleague here, Joe Teague at Equity Armor Investments, bringing this to you every week. Tune in next Monday, 10 a.m. Eastern. We'll catch you then.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.